Hi everyone, welcome to another episode of Geostrategy in Action. I'm Famke Krumbmüller, I'm a partner at EY and I'm responsible for the geostrategy team in Europe. So we're now speaking in mid-May. The conflict in the Middle East has essentially been going on for a rough 2.5 months. The April 8th ceasefire has been broadly holding since about half that time. And while the US and Iran continue to exchange proposals around potential resolution to the conflict, currently it looks as if a viable and long-term resolution seems relatively far off. As the conflict is already lasting much longer than what I think a lot of market participants and businesses as well anticipated, the global impacts obviously continue to come through, and that is mainly via the energy markets, which is why I have invited my colleague Olga, who covers energy in Europe, to join me and help me shed some light on how to think about this, how the energy markets are impacted by what is happening in the Middle East. So Olga, welcome, and thank you for joining me. So when we think about the current conflict in the Middle East, this essentially marks the second major geopolitical shock to hit energy markets, certainly European energy markets, in just 4 years. And so from your perspective, when you think about these shocks and their consequences, is this second shock very different from the first one?
Thank you so much, Famke. No doubt that both shocks are major disruptions to the global energy system, but they are fundamentally different in their nature. For instance, the Russia shock was regional and infrastructure-driven. Over decades since the Cold War, Europe and Russia built deep pipeline integration. By 2022, around 45% of gas imports and about 25% of oil came through the pipelines from Russia. It was efficient, but created a very concentrated dependency. And when the link between the countries broke, Europe was exposed. What we are seeing now, it is a different type of risk altogether. The Strait of Hormuz is not a regional link, it's a global choke point. Around 20% of seaborne oil products and LNG move through on this critical corridor, connecting supply chains across continents. There are some rerouting options, but they are limited, both in capacity and in what can realistically be redirected. So unlike the previous shock, this is not about dependence on a single supplier, it's about exposure of a global system. And if we look at Europe's price response then and now, we can see a mixed picture. For instance, gas markets are less stressed. The average price in April 2026 was 50% lower than during the same period in 2022. But in oil and petroleum products, pressure is building. Oil and diesel are 10% above the level of 2022. And jet fuel is 30% more expensive than then, reflecting tightening product balances rather than a full supply collapse.
Yeah, thank you. Thank you, Olga. Super interesting. And I mean, the difference that you're essentially making is that you say this is exposure to a global system constrained to a global choke point. I think this is a concept that will become increasingly critical in this world that we're observing of more geostrategic competition and the instrumentalization of these global choke points. So very, very interesting notion. The other thing that you said is that this shock is essentially not about a single dependence. So what are, from your perspective, the most vulnerable energy commodities or products for Europe in this current crisis?
If we look at the most vulnerable areas for Europe, it really starts with oil, but not in the way you might expect. Since 2022, Europe has relied more on a combination of light US oil and heavy Middle Eastern barrels. Refineries adapted to process that mix. But now, with the absence of Middle Eastern supplies and heavier barrels became less available, the overall input is getting lighter. In simple terms, lighter oil tends to produce more gasoline, while heavier oil produces more diesel and jet fuel. So the balance of products is shifting accordingly. And that brings us to the most critical vulnerability today. It is jet fuel. Around 60% of OECD Europe's jet fuel imports last year came from the Middle East. There are alternatives from Asia, but the countries like China and India prioritize their local markets today and limit the exports. So Europe has found some replacement volumes from the US and Nigeria, but not enough to fully close the gap. So this is less about a pure supply shock, and it is more about tightness in a specific product market. LNG is another area of risk, but in a more nuanced way. At the headline level, Europe's exposure to the Middle East is relatively small. Around 8% of LNG imports. It is small because 55% of LNG imports came from the US last year. However, that masks important country-level dependencies. Some markets like Italy, Poland, Belgium were much more exposed to Qatari supply. In the short term, reduced flows from the Middle East have been offset by additional volumes from the US, Nigeria, and to some extent Russia. But again, this comes back to the same issue. Substitution is possible, but it comes with higher cost and greater complexity.
So you talk of substitution, and you mentioned how high actually the LNG imports from the US have been to Europe. It seems to me like the US essentially became the dominant energy commodities supplier to Europe. What do you think about that? Is that right?
You're absolutely right, and that's one of the key shifts we're seeing. So let's have a look on just two products. LNG, I mentioned that the US share was 55% in the total imports of Europe last year, but this year this share increased to 60%. It is quite extensive. And in jet fuel, shift is even much more dramatic, from about 15% at the beginning of this year to nearly 50% by April. So while Europe has diversified away from Russia, it is increasingly relying on a single alternative source. And that creates a new type of risk, not identical to the past, but still a concentration of supply, bringing Europe closer to the kind of dependency it was trying to avoid.
Yeah, definitely. Super interesting. And to be honest, when I look at the current state of the transatlantic relationship and in general, the tendency of all geographies, but also including in Europe and certainly on energy, to try and reduce dependencies, I think this new or increased dependency on the US will certainly is certainly going to raise some question in Europe. So maybe in that context, how realistic or easy is it from your perspective to actually become less dependent on the US, on US LNG, or over what time frame?
In the medium term, it is really challenging. Most of the new LNG supply from new facilities is coming from the US. There is a big project in Qatar as well, but it is expected to be delayed to come online. So diversification is possible, but meaningfully reducing dependence on US supply in near term is unlikely.
Okay, all right. So that's I think comparing and contrasting the politics and the on the ground realities maybe with what's feasible. So that will be interesting to keep in mind as we listen to these conversations in Europe, if and when they happen. So back to the current and immediate shock and the conflict in the Middle East. As I said in the beginning, right now, from a geopolitical perspective, it is difficult to see how a especially viable and long-term solution can be found to this conflict. That being said, of course, there might be a situation where, to a certain extent, the strait might open, at least for a certain amount of time. So maybe with that context from your perspective, how durable is this shock, or what would be the difference in impact between, let's say, the strait opens tomorrow versus it stays closed for another couple of weeks or months? And is there any difference between these kind of timeframes at this stage? How should we think about that?
So we all understand that the level of uncertainty is very high. And identifying an exact period is like a fortune telling with coffee grounds. So, in the current environment, the scenario driven approach comes to the forefront once again. And if the strait reopens quickly, the shock remains temporary, but the system does not reset overnight. Logistics, shipping routes, contractual flows all need time to adjust. So, even in that scenario, recovery would unfold either weeks or months, not days. And for LNG specifically, it could take years. If the disruption lasts longer, the impact becomes more structural. And the key point here, the longer the disruption lasts, the longer the recovery will take. And even after reopening, we could expect a lasting risk premium as companies reassess transit routes, insurance costs, and broader geopolitical exposure.
Yeah, and I need to pick you up, obviously, on what you said about scenario analysis in the context of uncertainty. And when we look at our scenario analysis that we've done about how this conflict could evolve in the longer term, we still think that in 3 out of the 4 scenarios, there's a risk of a certain level and different levels, but still a certain level of disruption to the global economy. So to your point as well, that the longer the disruption lasts, the longer the recovery will take there as well. So I think super important to keep in mind. So maybe just my last question for you, and looking at it in a little bit of a more long term. We said at the beginning, you mentioned it, this is the second energy shock to Europe in just 4 years. We've seen this already, even though, of course, as you also described, the exact source is different, etc. But do you think there will be structural consequences from this? Governments, businesses will learn from this, or will start to think about Europe's energy supply and dependencies differently?
Let's say that the previous crisis of 2022 has already brought some lessons to Europe, and Europe has clearly strengthened its energy security since then through diversification and push into clean energy. But the system still relies on a significant import gap. And that gap is now largely filled by one dominant supplier, the US, as we have already discussed. This will likely accelerate the push toward sustainability, but from another angle, not just as a climate agenda, but as a question of energy independence and security, which has been discussed in 2022 as well. But now maybe there will be a new wave of these movements.
Yeah, thank you. Super interesting. And I think it's super important to really highlight that this might actually, and maybe somewhat counterintuitively, accelerate or re-emphasize the importance of the push towards sustainability, to the extent that it contributes to Europe's increasing energy independence. And I totally agree with you. And I'm very convinced that this was another episode that reinforces the direction that Europe is taking on that front, even though that's creating many challenges as well. So thank you very much, Olga. Super interesting. I'm sure we could speak for a long time, but I think this really gives a very, very helpful overview of the things that we should be watching. So if I think about what you said from my perspectives, there's essentially 3 things to remember, which is, first of all, this shock is about exposure to a global choke point. And for Europe, in that context, the most important exposure for the reasons that you described are to jet fuel, LNG, and the crude feedstock, where substitution is possible. And this is what we're currently seeing, but it's happening at a higher cost. So that's the first point. Second, I think from what you said or what we discussed about substitution, this is actually bringing Europe closer to another dependency, this time on the US, which is something, as you said, that cannot really be changed in the short term. But I'm convinced that there will be discussions about this and what that might mean. And then finally, and we have certainly said this for some time, but it continues to be true, which is that already now the expectation is that it will take months to years to recover. And of course, the longer the disruption lasts, the longer the recovery will take. So that's already creating big challenges for the global economy and for businesses in Europe and across the globe. So if I can conclude from a business perspective, it means continue to follow the developments closely, assess how it might impact your business specifically, where the shortages might come the longer that this situation lasts. And of course, as we always say, implement a geostrategy in order to be able to be on top of all of these developments and actually adapt the way that your business thinks about this. So with that, thank you, Olga, and thank you everybody for joining us, and hopefully see you soon.